Hello, this is John Cavalli, and this is a very special video. I'm having audio problems, so you're not likely going to get the best audio, but I felt like this was important enough that I wanted to get it out to us. And so here we go. Let me move myself out of the mainframe and into the corner. So this post, as I mentioned before, is a little bit different in that this is an educational video to try and explain some of the intricacies of interest rates and fixed income instruments. So let's get right going here. First of all, what I want everyone to remember, recall, understand is that interest rates have an inverse relationship to the value of bonds. So interest rates up, green line, value of bonds down. This is the 10-year. Those of you that are in listen-only mode, I'm going over a chart that looks almost like the exact opposite of each other. As the interest rates go up, bonds go down. Interest rates down, bonds up, and vice versa. Okay, so we got that. Longer dated bonds will have more fluctuation because they have more coupons. Shorter date, a 90-day bond probably has no fluctuation, hardly at all. It's not even really a bond. That's a bill, but that's neither here nor there. A 1-year bond versus a 30-year bond, or think of it as the diving board. The 30 years is going to be farther out. It's going to have more movement. All right. Wanted to recall everybody's attention. This is another exaggerated example, but this is the 30-year mortgage rate. This thing went from about 3 to over 5. Huge move. On a percentage basis, the 10-year yield since January, we are now in April of 2022, has moved dramatically. It's not this dramatic, but it's moved dramatically. So what does that mean? Well, that's put a headwind faster than normal into our bonds. Headwind meaning pulling the value down ever so slow. Okay, what also does that mean? That means that the coupons that we will receive as our bonds reinvest will be bigger. As rates go up, we get bigger coupon. So at the beginning, it's a bit of a headwind. Once we get into it, it's a tailwind. That's what I want everybody to understand. And generally, rates don't go up and up and up. So that's the next post that I'm going to, or the next graph that I'm going to show. Those of you that are in listen-only mode, I've got the long-term bond, a 40-year, 10-year Treasury bond yield that's in the blue that's continually going down. And you'll notice it's just an almost continuing. Now, Paul Volcker back here in the 80s broke the back of inflation. We've not had inflation. Demographics playing into that aging economy. Now, what's more interesting is that this is the FOMC rate. This red thing, those of you that are in listen-only mode, you'll see it's bounced up. Only here it got a little bit higher and did rates. It's in a very trending down our economy. I mean, these rates back here, guys, back in the 90s were up in the 10s. And you think about a 10, we're talking about a 2.5, 2 3/4 10-year interest rate. However, it moved from a very low rate. So that was our faster. So that was our first thought. Okay, if we blow this picture up, those of you that are in listen-only mode, now I'm looking at about a 1-year chart. This move that we've had since basically January of this year has probably played itself completely out. No one knows for sure, but it's highly unlikely rates are going to go blasting back up to the 10s like they were back in the 90s. And so now could be, if your allocation calls for it, a very good time to purchase bonds because you've got this nice coupon and the headwind is behind us. So just wanted to put some clarity on this. While bonds, and I mentioned in the post, are relatively fixed income, those of you that are in listen-only mode, I'm going back to the beginning of the post, I'm scrolling up. They're a relatively simple product, but they move kind of like golf. You do the opposite thing that you may think. As interest rates go up, they go down. In golf, if you want to hit the ball to the right, you aim to the left, and it makes it go to the right. So a little bit of golf trivia and analogy. Okay, hope this helped, and I'm going to, with a little luck, embed this video into this post, and it will be kind of an educational rather than a review. Thank you so much for your time.